Hello there, still on fairbinaryoptions.com. So let's write on the screen where we are and what we are doing here. So this is fairbinaryoptions.com. And we are continuing here our Binary Options Academy project, and I would like to take a look here at, of course, the rising wedge or falling wedge, or wedges that are breaking the other way. We all know the concept of a rising wedge or a falling wedge. Normally a rising wedge it is looking like this. So you have a move that goes to the upside with a five-way structure and goes like this, like this, and like this, and like this, and then by the time it is making this one, it's a rising wedge. Any rising wedge travels within the, or any wedge travels within the 1 and 3, like this. And of course the 2 to 4 trend lines. So this would be a rising wedge. And the falling wedge looks exactly like that, just that the opposite, in the opposite direction, of course. So falling wedge goes, you have a move to the downside, and then one like this, and then another move to the downside, one like this, and then another move to the downside here, and that is a falling wedge. Of course, it is traveling within the 1 and 3 and 2 to 4 trend line, exactly like the rising wedge, only that this one is a corrective move to the downside, like this. Actually, it can also be an impulsive move, a terminal impulsive move, but that's another story, like this. Now, there is a saying in the trading world that any rising wedge is falling. So these are two different patterns. So any rising wedge is falling. So the logical thing after the 2 to 4 trend line is broken. So this is the thing to watch, the 2 to 4 trend line. So we're looking at the 2 to 4 trend line. After the 2 to 4 trend line is broken, like this, normally we should go and buy put options here, because this is the rising wedge that is falling, the 2 to 4 trend line is broken. Or we should go and buy call options here, because this is a falling wedge that is rising, so we should expect higher values. This is the reason why wedges are being also called reversal patterns. However, there is a catch or a trick, and a question that deserves a lot of attention. Is or are wedges reversal patterns all the time? Is all the time a rising wedge or a falling wedge, a rising wedge falling or a falling wedge rising? Well, the answer is no. And you may be surprised to see such a thing, and you might say, well, how come? Because this is a fact known by all over the world, the traders from all over the world. Well, it is easy. It may turn out that you have a five-way structure in the form of a falling wedge, the market to go and break the 2 to 4 trend line, sucking everybody on the long side, and then just viciously retrace and break the lows here. Or you might have a rising wedge here, breaking the 2 to 4 trend line, sucking everybody on the short side, and buying put options only for price to reverse and explode higher. These kind of patterns are actually being called triangles, or special types of triangles actually are being called running variations of triangles, running variation of contracting triangles. And you don't want to fight such a pattern, because that is extremely, but extremely important. Normally in that kind of situation, let's say if the 2 to 4 trend line is broken to the downside and then the market reverses and takes the highs, you want to go long and you want to buy call options by the time market broke these highs. Or here, if the market breaks the 2 to 4 trend line here, like this, to the upside, and then reverses and moves to the downside here, you want to buy put options when the lows are being taken, because it means that the triangle is completed and the new wave is about to come. Stay tuned for the second part with the classical example that we had on the euro and the Japanese yen, I would say last year on the daily chart, but these are extremely common, even on the 1 hour chart or 4 hour chart or even on the lower time frame. So stay tuned please for the second part.